Hello and welcome to this tutorial here where I want to introduce our new tool we have released recently to our platform, and I'm very proud of this tool because it simplifies the process to evaluate the fair price of any company. And this tool is doing a 10-year projected analysis of the revenue growth, the profit margin, free cash flow margin, desired PE, and also the desired price to free cash flow. It's very simple to use because here are the fields. You input all your assumptions based on your low, mid, and high criterias. And the first assumption we're going to talk about is the revenue growth. And we see here directly the 5-year average of 70%, the 3-year average of 14%, and the last trailing 12 months with 7.5%. We see here also there is a decrease in revenue. So the question is, are those values we have here from Microsoft, are these sustainable? And I have no clue. So maybe we check research papers, what is the 10-year growth potential of Microsoft? Or we go back in the history and see, hey, how was it here? And which kind of numbers we might take for our assumptions. And what I see here, I will go with the 7 in the low and 13 in the high for my assumptions, because I think the 7, which we put in right now, is something what is achievable for Microsoft. That's daily business with all the business units. This they should do. And 13, I think it's kind of possible if things goes well. And maybe we will end up somewhere in the middle with 10. So I think from 7, 10, and 13, we have great assumptions. And that's why we make also this tool here to have different kind of scenarios on our assumptions. The next ratio we're going to discuss is the gross decline rate. And we define this ratio as an expected decrease in growth over time, providing a more conservative calculation of future growth. What does it mean? The ratios, the growth ratios we have implemented here are maybe high or conservative. We don't know it, but to have at least a bit of conservative calculation in our fair value, we can also apply a conservative growth rate. It's by default with 2, but with Microsoft here, I set at least 1% of gross decline rate to have a bit of conservative calculation at the end when we see the valuation. Now the next point is the profit margin. And this is a very important ratio for many investors, because here you see how profitable is a company. And as you can see here, Microsoft is extremely profitable and also consistent over the last years, always over 30% in the high, close to 37%. But this is what I don't want to put in. I will go with a different value. I will take in the high 35%. In the mid, I go with 32, and in the low, I take 29. I think that's very reasonable. Similar to the free cash flow margin, we see also here high free cash flow margins. But what we also can see is that those margins are always below the net income margins. And that's why we do exactly the same what we had here for the profit margins. We assign high margins, but a bit below the profit margins with a decrease of 3. So here we put 30 and here we put 27 in the low. I think those numbers are reasonable. And right now, when I see this here, we have nice low assumptions and pretty nice high assumptions. And this is what is the tool about? What makes it so special here, that you can make different assumptions for different scenarios. Now we come to the price earnings ratio. And guys, I see this ratio from a different angle, from a different perspective, because I always set this as my default multiple. And based on my assumptions I do, if I go higher in my assumptions, I also make higher multiple ratios, but I will not put these to 30 or 35 because I have a limit for my side. My base is 15, and the more profitable, the more growth a company has, the bigger a moat a company has, the higher I also put these ranges. For Microsoft, we know there is a huge moat. It has a huge brand, and it has also high return of invested capital. So I have to factor these things in. And that's why I go with 15 in the low and 21 in the high. And the same thing is also for my price to free cash flow. Here I go exactly with the same numbers, 15 in the low, 18 in the mid, and 21 in the high. The reason is very simple. Over the long term, price to free cash flow and price earnings should be the same. That's why I go here with the same numbers I assigned for the price earnings. And now we come finally to the desired return. What is my desired return? Guys, very important. As you make higher assumptions, as we have done here, you have to make more margin of safety. Because at the end, the higher return or margin of safety you want, the lower the price you pay. And I'm pretty sure you know also that the market makes an average between 7 to 9%. But what I do here, I don't do passive investing with an ETF. I do some investing in an individual company. And that's why I want a bit higher returns. I want 10 in the low, 12 in the mid, and 14 in the high to have also kind of higher margin of safety for my investment here. And now we come at the end to the valuation. I think that's the most interesting part here, because based on our assumptions, we see direct the fair value ranges we have in the low, we have in the mid, and we have in the high. And the nice thing here with our software is that you see direct what is your potential return if you would invest right now. Not based on your fair value ranges. No, what would be the potential return if you invest right now? And if you invest right now in Microsoft, you would have a minus 1% return. So you have a negative return if your low assumptions occur. So if all those assumptions here occur, you would make still minus 1%. And if your mid assumptions occur, you would make 3%. If your high assumptions occur, you make 8.4%. And you see here very huge differences. And these differences are the reason because of our assumptions, because of our scenarios we have here applied for Microsoft. Very simple. And that's why I love this tool. It's very easy to use, it's very easy to understand. Different scenarios in the low, mid, and high will end up in different fair value ranges in the low, mid, and high. And that's why I really hope you like this tool. Try it out, join finqube, and I really hope I see you also soon when I publish more and more interesting videos about my stock analysis here on our platform. So many thanks for joining. Have a great day. See you soon, and bye-bye.